But we begin with the markets, as we always do here on NYSE Live. Joining me now is Frances Newton, CIO of Tuttle Wealth. Frances, welcome to the New York Stock Exchange.
Yeah, thank you for having me.
All right, so we're a little bit down heading into the session. What do you anticipate happening today?
I'm not entirely sure. I don't think that the sell-off has too much to do with the Strait of Hormuz. It's more about yields. And I think the question is actually more around tech earnings and what's going to happen with AI, because I think people think that oil now is range bound. We know where the lower end of the range is before the war. It returned before the war. It's now back into the top end of the range. So I think market participants can start to price in that range on oil. So depending on the news coming out of the Strait of Hormuz, I think we kind of have a range to price into the markets finally. Notably, rates did not go back to their pre-war prices, even when we thought we had a peace treaty. So that's very interesting. Looking ahead to earnings, obviously Google reports, and AI is going to be the big AI trade, which is 90% of GDP is the AI capex spend, is going to be anticipating these earnings.
Do you think we're going to see capex spend like we did last earnings season, super high?
I think it's going to decelerate a little, but more notably than that, I mean, Morgan Stanley came out with a bit that it was going to decelerate over the course. It's where it's concentrated, but it's debt now. So instead of cash on the balance sheets that's going into the capex trade, there's a circular borrowing thing that's going on in the AI to keep this capex spend very high. So that doesn't matter until it does.
Speaking of spending, I understand that you're very focused on the US dollar. Why is that significant?
Well, it's interesting because talking about the yen carry trade and what's happening with global flows, also when it comes to trade negotiations that I'm sure Trump is going to continue after the midterm elections, leverage with China, that's all very significant with the dollar. As rates move higher, we expect the dollar to move higher. The interesting thing about gold is it's now negatively correlated to real rates again, which it kind of had departed from that. And so that's why I'm watching the US dollar.
The Fed will have its July meeting next week. It's not expected that they're going to raise rates. How heavily do you think oil will factor into their decision? We're seeing it go move higher this week. It's about $95 a barrel now.
Yeah, so I think that Chair Warsh is going to differentiate between the supply chain shock happening in the price movement of oil versus what's going on with monetary policy. And given the volatility in oil and the volatility in what's happening with the conflict, I imagine that he's going to hold rates steady. Going in front of the election, I think he's going to hold rates steady, and I don't think that's a political thing necessarily. But they're going to wait to see how this conflict smooths out. Inflation looks to be reaccelerating, and so he'll be talking a lot about that, but I don't think yet he'll raise rates. He's still looking into these task forces and getting things sort of going for his term.
How heavily do you think the conflict in the Middle East will play into the Fed's rate decision and inflation overall?
It's definitely going to bring up CPI. I think the Fed should try to take the volatility out of their decision making, is going to focus on core. And I do think that the conflict in the Middle East probably will resolve at some point, and I think that the Fed probably is anticipating that. So basically we're watching Trump's tweets, but we now have a range for oil based on the conflict. So it will be whether or not it breaks out of that range to the upside or less likely to the downside. And then that's when the market will start to heavily reprice oil into balance sheets going forward.
I think overall the markets have been rallying, but we do see these swings.
Right.
Given the choppiness, how do you advise your clients when we're seeing these, one day we're in the green, one day we're in the red?
Right. So with our clients, we have a very unique scenario because we have the wealth management side, but it's based on Matt Tuttle's ETFs. And so what we have is we have exposure to those ETFs where we have a trading desk that's actively trading memory. They're actively trading 0 days to expiration. They're actively trading all of these things. So it's great because they get the benefit of having a trading desk without buying and selling in the individual portfolios. And the other thing I think is so amazing, so it's absolutely free. Matt Tuttle puts out the Heat newsletter every day, and it goes through all of the bottlenecks in AI. It goes through how the trade's moving through AI, how the liquidity's moving through AI. That's at TuttleCap.com. It's totally free. I haven't seen anything else out there that has that much information on what's happening in the AI trade. But the most important thing is our investors are benefiting from that active trading that's going on at the desk.
And there is a lot of focus. You're mentioning that this newsletter focuses on the AI trade. Are there any other sectors that you're looking at?
Yeah, energy is super interesting. So I was at a conference yesterday, and it's impossible for us market people to study absolutely everything. But so energy comprises only 3% of the S&P 500 right now, which is a historical low. And so there was some speculation in the CIO roundtable I participated in yesterday that energy is going to be the next supercycle. What supports that narrative is that AI actually requires all of this power. So that's the trade to watch. We've been telling our investors to buy oil on the dips, and obviously you see today that energy is moving higher.
So you think the future of energy is tied to AI data centers?
I do think so, yes, because the demand is increasing at a rapid rate, and that's not going to slow down.
And anything else you're watching that's under the radar right now that we might not be talking about that you think is going to hit big in the headlines?
I don't know that it's going to hit big in the headlines, but what I find very fascinating is the Bitcoin is no longer really correlated to the S&P 500. So forever we had this debate about what's the intrinsic value of Bitcoin, and I think the bull case is the fact that there's a scarcity component to it. But I just think it's so interesting that the S&P is, rallying near all-time highs, and Bitcoin has just completely sold off because those were heavily correlated at one point. I don't know what the future holds for Bitcoin. I don't know if it's going to become AOL online, or if people are going to pour back into Bitcoin specifically. I think crypto is not going away.
Frances Newton, CIO of Tuttle Wealth, thanks for joining us at the New York Stock Exchange.
Yes, thanks for having me.